probably joining on here. But for the sake of time, we'll maybe get started here. We appreciate you taking the time to join your St. Patrick's Day evening with us here tonight. Thanks so much for taking the time to be here. And tonight we're going to be talking about the risk management program. So for many of you, I know on the call, some of you are quite familiar with this program and have been involved in it over the years. And others, this is just a way for you to be able to learn a little bit more about the program and how it works. So we do appreciate you joining us for tonight. My name is Jacqueline Hornberg, and I work on our producer relations team with Beef Farmers of Ontario. Also on tonight from BFO staff, we have Evan Chafe. Richard Horn is on here, and Leanne Wormley as well as a few of our board members that we have on here tonight. We also have some representatives from OMAFA and Agricorp that we'll be hearing from later tonight. So tonight's session is going to be recorded. I feel like there was many people that signed up but maybe didn't want to commit their St. Patrick's Day evening with us. So that recording will be shared and sent out to everyone that is registered. And you can feel free to share that recording with anybody who might be interested in the RMP program as well. Throughout the evening too, if you have questions as we go through, you can feel free to type those into the chat box. We will take time at the end after both of our presenters have went. We will take time then to take questions, and people can feel free to unmute and ask those questions at the time. But if you think of one during the presentation, feel free to pop that into the chat box. And we'll get to those at the end. So the intent of this webinar really is to discuss Ontario's risk management program and to share some producer experiences in regards to the application process and requirements to be part of the program. So as you know, beef farmers face many uncertainties every year, and many of those risks are really beyond your control. So it might be your increased cost of production or even trade uncertainty. So these risks, particularly we find are very challenging for younger, maybe less established farmers who maybe have limited ability to mitigate some of those severe fluctuations that are in the marketplace. So the RMP program is a Made in Ontario solution that's really designed to help farmers mitigate those types of risks through a targeted insurance coverage. And that helps to capture changes in market prices and changes in production cost as well. And it continues to be within BFO's top priorities, really focusing on ensuring farmers have access to sufficient risk protection to guard against increased market volatility, specifically trade threats, input cost volatility, and even supply chain challenges or disruptions as well. So this is a very valuable program. I think for anyone who's on the program, you've seen that over the years. And it's really important, I think, to our industry to continue to have a risk mitigation program like this. So we are pleased tonight. We have kind of a mix of people that are on the call. As I mentioned, some are very familiar with the program and some maybe are joining in order to learn more about it. So it's great to see that, and hopefully you feel comfortable to ask questions as we go through things tonight. So joining us tonight, we have Ellen, who is a senior industry specialist with Agricorp. Ellen has been with Agricorp for over 20 years and is actively involved in the agriculture community outside of work as well. So Ellen and her family run a herd of beef cattle with a focus on high quality genetics. So for anybody who shows cattle, she's a very familiar face to the show ring, involved with showing livestock throughout Canada and into the United States. So please join me in welcoming Ellen, and we'll turn things over to her for an overview of the program to begin with.
Perfect. Thanks, Jacqueline. I'll just take a minute here and make sure we get everything shared here where you guys can see the presentation. Let me know if you can see that okay there.
Yes, looks good.
Perfect. Okay, well, thank you very much for asking us to be here tonight to go through the program. As Jacqueline mentioned, it's part of a large suite of business risk management programs, and that's the one we're going to focus on mainly here today. But we will go through just a little bit here at the start about Agricorp, all the programs that we have to offer in that business risk management suite. Go through a few of those just at a very high level, let you know where you can find some more information on those programs if they're of interest to you, and then spend most of our evening talking about the risk management program. So as Jacqueline mentioned, I'll go through my presentation. I had the privilege of chatting with Jim earlier today, and he's going to give a really good presentation after this, sort of on the customer experience as well, and his experience. So we'll kind of go through both of these presentations and then take some questions at the end, either for him as his personal experience or from the program side. And as Jacqueline mentioned, we do have some of our own math colleagues here as well. So if we get into anything on the policy side, we've got them for support there from a question perspective too. So as Jacqueline mentioned, pop them in the chat and we'll get to those all at the end. So again, just a little bit about Agricorp. As Jacqueline mentioned, some of you may be very familiar with us, some may not be. So we do deliver programs on behalf of the government. Over 47,000 Ontario farmers participate in this wide variety of programs that we've got. Our goal is really to deliver a quality customer experience when we're asked to deliver these programs on behalf of the government. And since we were established in 1997, over $8 billion in payments have gone out to farmers on behalf of the Canada and the Ontario governments. When we talk about the business risk management suite of programs, there's three big programs that come to the top when we're discussing these things at all of our meetings and with our producers at trade shows or different places. And that's agri-stability, production insurance, and risk management. So again, our website has a lot of really good information on these programs. We're not going to touch on agri-stability or production insurance in any depth tonight, but again, something that you may want to consider. And when you think about the risk management program, again, in particular, when you're thinking about risk management, you've got livestock and you've also got the grain and oil seeds that participate in the risk management program. So again, just something to keep in mind there if you're growing your own feed or something like that, that may be something that you might be of interest to look at as well. And when we talk about the risk coverage, again, when we talk about that business risk management suite, it really is about covering different risks. So taking some time at the start of the year, the timing of this webinar is perfect. All the application and enrollment and coverage change deadlines are coming up for these programs for the 2026 program year. So we'll get to some of those dates and timelines later on. But again, taking a few minutes to just think about what you need to focus on as far as a risk perspective, whether that's large declines in net income, increased costs, general farm losses and expenses. You can see here the different programs that can help with those sort of things. And again, tonight, the risk management program we're going to focus on is really around protecting against those increased costs and lower market prices. I mentioned about coverage dates. So again, timing is perfect for this webinar. Hopefully a good time for you as producers to be thinking about what you want to be covering for risks as you go into the 2026 program years. RMP for livestock, just a note here, that deadline has been extended. It's normally April 1st. It is April 30th for the 2026 program year. So we are looking to mail renewals to customers who've been in the program in the past, probably the week of March 25th. So it gives you about a month's time to make any coverage changes. If you're new to the program, that April 30th will be the deadline to get your application in as well. And then we've got the dates there for agri-stability, production insurance, RMP for grain and oilseeds, and production insurance for the fall policies. Keeping in mind for RMP for grain and oilseeds, if that is a program that is of interest to you, it is a requirement to participate in production insurance in order to be in the RMP for grain and oilseeds program. So definitely too that you can find information on our website for that one as well. And just a few of the other programs, and again, in this list, there's a couple here that definitely pertain to anyone that's not already signed up for RMP. Signing up for RMP, Farm Business Registration Number and a Premise ID number are two requirements for RMP. So those are, again, programs, if you're not familiar with them, that there's definitely lots of information on our website about how to get signed up for those and how to get those numbers if you're filling out an application for RMP. Okay, so for tonight, again, like we said, our main focus is going to be on the risk management program for livestock. And really, this program works like insurance. So it's there to help offset those fluctuating costs and market prices. Your premiums are based on insured production and a chosen coverage level. So we're going to get in a few slides to looking at how you calculate that insured production and the coverage levels that are available as well. So again, we said it is like insurance. It offsets those costs. It's designed to work in tandem with other business risk management programs. So again, like we talked about, AgriStability, some of those other, whether it's production insurance, RMP for grain and oil seeds, lots of options to make sure you're covering all the risks that the producers are facing in this day and age. And your premiums are going to be based on that insured production and the coverage level. The risk management fund. So again, a few years ago, this changed into having an RMP fund. So what that fund does is it holds sector-specific funds. So that's the annual Ontario government allocation plus the premiums paid by farmers. They all go into that fund, and it is, so for the example tonight, it would be the cattle fund. So all the premiums from the cattle producers go into this fund. The government allocation goes into that fund, and that's where payments are made out of on a yearly basis. Yearly funds that are in that account that are not used for payments do accrue for future years. So they don't go back into the government, they don't go to another sector that's in need. Those cattle funds stay in the cattle fund for a future year where those funds are needed, and they would be available for producers at that time. So how to participate? Again, we're going to talk about meeting these eligibility criteria. We'll talk about what those are specific to the cattle plan and the dates that you have to do things for the program. Apply or make your coverage changes. So that's going to be the first big one that's coming up on April 30th. And we'll talk about what you have to do in those timeframes and what you should be looking at from an insured production perspective. And then paying premium. So for the premium, there's a couple of options in the RMP for livestock plan. You can pay that annually or semi-annually in 2 installments. So again, something when you're filling out your application or when you're filling out your renewal, you can make your choice as to how you prefer to pay that premium. So again, RMP for livestock from a reporting sales. We'll get into it a little bit specifically just for the cattle plan as well. But this is really applies to all of the livestock plans, and we will focus specifically on cattle tonight, but there also is an RMP component and plan for hogs, sheep, and veal as well. And all of those RMP for livestock plans have a sales requirement, so you do have to report your sales. They can be submitted online, mailed, or faxed. And Jim has a couple of good examples on how of an online submission and one that he's filled out and signed and sent in. So some really good examples there we can look at later. Pre-populated forms are available for download on our website. So we do encourage as much as possible those online applications and forms to come in that way. That way there's less room for error. It's efficient. It comes in, it goes right into our system, less time delay for somebody to data capture, etc. And then as far as when you're going to submit these sales reports, it does depend on the category that you're in, and we're going to talk about categories in detail here in a few minutes. But the cow-calf category, you're going to report semi-annually, so that's July 31st and January 31st. And then for backgrounder and feedlot, you're going to report quarterly, so that would be all 4 of those dates there. You'd be reporting a sales report to us. And if you don't have sales in a quarter, that's perfectly fine. You would just report 0 sales to us. And again, that can be a call in or send in the form to us. So this is an example of the sales report. Again, I put this in. Jim's going to talk a little bit about his scenario and some numbers and show you what he's got in here, which really helps to see somebody's numbers for sure. But again, just sort of the kind of information we'd be looking for someone that's not enrolled. You would get this sales report to submit every quarter. You'd check at the top here which quarter you're submitting for. And then the information we're looking for is really around that sale date. So we're going to talk about the sale date, whether it's heifers or steers, the weight type, average sale weight, point of sale, and then we do get into some information here about whether they've been raised from birth or purchased, and that helps us in this category. Again, we'll talk about it down the road with the categories, but if you are someone that's raising them from birth and you're selling at feedlot weight, but you have coverage in all the other categories, this raised from birth helps us do those calculations backwards for when they would have reached that cow-calf weight or that backgrounder weight. And then again, obviously important for everybody is the timelines on payments. So they are triggered when the average market price falls below the support level. And we will talk a little bit about the support level in a couple of slides as well. But again, if payments are generated, they would be semi-annually for cow, calf, and sheep producers. So that's the same as when you report your sales. Payments would go out in September and then again in March. And then 3 times a year would be payments for backgrounder and feedlot. So September, December, and March. And again, with no 2 years being the same, obviously the payments amount are going to fluctuate from year to year. We do use an interim rate. So with the funds that are available for the program, we want to ensure that a producer who sells at the first half of the year has the same access to funds as someone who sells at the end of the year. So we would use an interim rate when we do these September and December payments. And then as you can see, if there is an adjustment to that interim rate, it would apply back to the other quarters as well, again, to ensure that funds are available and producers are treated the same throughout the year. So now a little bit specific to the cattle program and the eligibility. So again, if you're someone that's new to the program and you're looking to sign up, these next couple of slides are really important as far as eligibility and requirements go. So the eligibility, you do have to enroll all your eligible production within a category. We're going to talk about those categories shortly, but cow, calf, backgrounder, and feedlot. You have to provide a premise identification number and a farm business registration number, pay premium, and then the cattle must be produced in Ontario and owned for a minimum of 120 days, 30 months of age or less, and sold during the program year. So again, when we talk about insured production, we're going to talk about that sold during the program year and how you're estimating what that insured production would look like. But again, that program year, for example, for 2026, which you'd be signing up for now, would be January 1st to December 31st of 2026. And you'd be looking to enroll animals that you sell during that program year. And breeding stock is not eligible except for the cow-calf category. So we'll talk about that cow-calf category and that breeding stock in that category shortly, and how you would report those from a breeding perspective if you're keeping heifers or a bull. And then we mentioned requirements again as well. So we're going to talk about these categories a little bit more here, but again, in the next slide. But what we got is we have 3 categories. We've got cow, calf, backgrounder, and feedlot, and they are weight based. And I know when Jim and I talked earlier, we had some good conversations around not getting hung up on necessarily the terminology and thinking about the weight gain within those categories. So we'll talk about that shortly and how to make sure you've got the right coverage at the start of the year when you're selecting those categories. Coverage level 80, 90, 95, or 100%. So there would be a different premium rate for each of those percentages. And again, you'd be looking at determining what coverage level suits your operation. Determining the insured production. So again, that's going to be based on weight or number of head, depending on the category, whether you're keeping them for breeding purposes with a payment without sale form, and obviously considering the days of ownership for the eligibility requirement. And then pay premium and report sales. So that would be sort of from the start of the year, selecting your categories all the way down to reporting your sales to any potential payments that you would be eligible for. So when we talk about the categories, this is really what we're talking about, and the weight gain that we're talking about that you'd be covering when you're looking to sign up or look at your coverage again if you were to get a renewal. So again, what we were talking about when I talked with Jim today, getting ready for this presentation, is again, not necessarily thinking of yourself as a cow-calf producer or a backgrounder producer, thinking about what weight gain you put on those animals in your herd within that year, and where your risks are and what you want to coverage. For example, if you think of yourself as a cow-calf person who's selling calves, maybe, but let's say they're 650 pounds. Maybe you only care about the weight gain up to 550, and being only in the cow-calf category is okay, and you can do that. But maybe if you want to cover that extra weight gain, if you're always selling them at 650 or 750, you may want to look into the backgrounder category to make sure you're covering that full weight gain from birth up to whenever you sell them. So looking at those weights and knowing what weight gain you're going to put on is very important as we get into talking about your insured production. And again, someone who's raising cattle from birth to feedlot, you are going to get paid on all of that weight gain at the time of sale. So there is calculations in place to do the work back. So, Jim and I would chat, and I think he gave some good examples, and he's probably going to talk about it too. If you're sort of 6 months in the cow-calf category, 6 months in backgrounder, and 6 months in feedlot, you may not get that payment until that animal's 18 months of age. But again, we have things in place that obviously we're going to go back, and that cow-calf payment would be based on the cost of production and the market price at the time that that animal reached 550 or 500 pounds. So there are calculations and policy stuff built into the program to make sure that we can go back and calculate those payments at the appropriate time. So estimating your insured production, this is definitely a big part of the program, and ensuring that the coverage you have in place is right. So it is important to enroll in what plans you think you're going to be selling cattle in at the start of the year. So that would be you coming up to this enrollment deadline of April 30th. So again, just a simple example here, cow-calf insured production is done at a head basis. So in this example, 60 steer calves and 20 steers. So again, those 60 steer calves are going to be sold at that weight of 550 pounds in the cow-calf category. They would be paid out at that time of sale. So they would be reported in that quarter that they're sold. The 20 steers that are going to go through to backgrounder and feedlot, the payment would come for those steers at the time of sale at the feedlot weight. So again, the insured production is that 900 pounds in backgrounder minus the 550 you've put on in the cow-calf category, again, times those 20 head. So you're looking to consider that weight gain you're going to put on at each category. Again, where your risk is, you can apply in one of these categories, two or all three. That's your decision which categories you want to participate in. Once you are in a category, though, if you choose to cancel and get out of that category, you are out for the current year plus two. So again, if you're in a category though and you don't want to cancel, you're just not using that category for this year, you can report zero production. So for example, you've always finished them right through to the feedlot weight, so you have coverage in all three categories. You've decided you're going to sell everything as backgrounder at 900 pounds this year. You can report zero production for feedlot, and then in the future years, if you do end up changing again your management and wanting to feedlot, you would have that coverage still in place for that. The other interesting and again important part about this ensuring your production is really there is a lot of flexibility in the RMP program as far as changes go. We know it's extremely hard to know 100% what weight gain you're going to put on at the start of the year. So there is some flexibility built into the program around insured production. So if your insured production at the end of the year, your actual production compared to what you enrolled in April is between 5 and 25% up or down, we do a year-end premium adjustment on that automatically. So there's nothing that you have to do from a producer standpoint. We would address that, and either if your production has increased, we would send you an invoice, and if it's gone down, you would get a premium refund. If your production's changing by greater or less than 25%, we do ask that you let us know within the quarter that that's happening. And the reason for that is, again, to just ensure that we're collecting and invoicing or refunding the right amount of premium as the year goes on, and making sure that there's no holdup in payments as well, that we're making sure we're making the accurate payments on the accurate production that you have for that year. So payment without sale, this is the one where we talked about in the cow-calf category. This was added a few years ago so that if you are keeping calves for breeding purposes, there is some cow-calf coverage available. So again, that's up to 500 pounds for heifers or 550 pounds for bulls. And there is a form, I'll show you a sample of it next, and I think Jim has one too in his presentation, but it's a payment without sale form. So again, fairly easy to fill out. We'll show that to you next here. And again, the important thing is these animals would be animals that you're keeping for breeding purposes, only eligible in the cow-calf category if they're kept for breeding purposes. But again, if your management decision changes as you go through, and some of these animals that you were going to keep for breeding purposes, you end up not, you want to continue them through to backgrounder or feedlot, Again, you need to give us a call and we can make that change for you. And again, there would be some documentation around the CCIA tags and those numbers that are going to continue. Because if you've already received a cow-calf payment, we just want to ensure we don't double pay on that weight gain. But if they're actually going to go through and be sold as a background or weight and you've already got that coverage in place, we can go ahead and make that change for you for those animals that you've changed your mind on. And this is just a quick sample of the form. Again, so what we're looking for from a payment without sale perspective. Um, Cow-calves retained for breeding purposes. You're going to have the lot numbers, you're going to have the gender, the number of head, and the approximate date they would have reached that cow-calf period. The other thing that is on another page here is the CCIA tags. So again, that's how we would be tracking what's been kept from a breeding perspective. And then again, on the RMP for cattle side, determining support levels and market prices. So again, these market prices and support levels are calculated by OMAFRA. So for the support levels, they're based on the industry average cost of production, including purchase, feed, and yardage costs. And that would be multiplied by the coverage level that you've chosen. Market prices are collected and calculated by OMAFRA using the BFO data. So cow-calf prices, they're determined twice per year. Backgrounder and feedlot prices are determined weekly. So again, these are calculated and sent out. And again, we have a really good feature sheet on our website as well that talks in a little bit more detail about how these are calculated. And for sure, if you've got questions after we go through Jim's presentation as well, specific to any of those support levels or market prices, we can answer those along with OMAFA as well. So that is actually my last slide on the actual delivery of the program. This is just a quick contact slide. I'm sure Jacqueline can share it with you, or definitely just the phone number, the website that you can get a hold of us for any more information on RMP or any of the other programs that we offer. So I think at this time we'll switch right over to Jim's presentation, and then definitely available for questions at the end on both the delivery side and the policy side. So I'm going to sharing, and then we'll
Sure. Thanks
Jim
so much, Ellen. I appreciate you giving, I think, a very good overview for people to get an understanding, at least, of the program itself, which will tie in quite nicely where Jim can speak to kind of the experience of handling the program and how he actually looks after reporting into the program as well. So many of you probably know Jim. He's on our BFO board of directors as our cow-calf representative, and he'll give a quick overview of his farm when he begins and share a little bit more about his experience with the RMP program. And as mentioned, you can feel free to put questions into the chat if you think of them now, and we'll take time to go through those after Jim. So I'll turn things over to you, Jim. Your
Okay,
screen looks good.
just a quick check. Okay, and quick check that you can hear me okay, Jacqueline?
Yes.
Okay, so good evening, everyone. I want to make it clear the reason I'm here. My wife's a teacher, and what I understand is if the dumbest kid in the class can figure it out, so can everybody else. And I'm pretty sure that's why they asked me to present. We've been in this for 3 years, and I've probably made every mistake there is possible. So I'll go through those mistakes. And I really appreciate Ellen's time today as we talked through the different scenarios of of the things I did wrong. So we're a fourth generation farm. Quite proud of the fact we're a century farm, 40 cow Charolais commercial herd. Just a feel related to RMP is we retain maybe 10 heifers. We sell the top steers usually in January, but we did that earlier this year, and I'll talk about where my mistakes were there. And then our son actually buys the remainder and finishes them over at the other farm. So basically, we're a cow calf and a backgrounder. Yes, I'm a cow-calf director, and we've been in the RMP since 2023. Myrna gets credit for that, and I'm really pleased that we did it. And just a point of reference, we do 100% coverage. And if anybody asked me, I would suggest that. But of course, everybody's situation is different. The big question, why do we do it? There's two reasons. One is just so I can sleep at night. And to be honest, I got to stop watching the news. So the geopolitical situation, foreign disease, all the risks out there of a border being shut down. this lets me sleep at night knowing that there'll be, some protection for us if something disastrous does happen. That's why we get into it in the first place. But just on the second slide, um, the return on investment has been quite good. So this is our data since we signed up in April 2023, and credit to Matt Bowman and Bruce for the previous webinar. Myrna listened in on that and thought that we should sign up, and so we did. I thought, oh, we're going to put out $900. Maybe we'll get 1,200 back, whatever. If she wants to, we'll do it. I was pretty proud of my wife when the checks started coming. So here we'll start with July 2023, what we paid, what we received. Keep in mind again that we're in the cow-calf and then backgrounding. And my math for backgrounding is about 100 days, and it's we're just feeding silage and hay. We're not pushing them too hard, so maybe 2 pounds a day. So 200 pounds per head on backgrounding. So you can see through 2023, we paid the 857. The checks started coming. I smiled bigger every time they came. So if you look at the balance there, we ended up paid out 857 and brought in 11,760. So that was fantastic. July 24, we paid out 992. And down here's the total of 442.50, and ended up with 32.58. Now with the markets the way they are right now, we've had two payments of 1246 and 219. We haven't had I call it the balance up from 2025 yet. Will come in March if there's going to be one. So overall in the 3 years, we paid out 2669 and we've received 18,332. So we're ahead 15,663. I know it's not going to continue, like, more than half of that or two-thirds of it was from 2023. But then I revert back to the, sleep at night insurance feeling of having that protection there is why we're doing it. Just wanted to touch base on the reporting. Ellen had spoke. So this is the cow-calf reporting. It's pretty simple. And I have a summary sheet at the end that'll talk about some of my mistakes and ideas. So our reporting from July 1st to December 31st. Last November, we sold 11 steers. They averaged 678, and we sent them down to Cookstown. I'll come back to this backgrounding, even though you don't feel like you're backgrounding. With an average of 678 there, if we weren't in background, or even though we didn't background them, this is basically weaned weight of our best steers. I wish they were all like that. We wouldn't have got any insurance, let's say, from 550 to 678 if we weren't in the backgrounder. So that's one of my advices at the end is if you're kicking butt on coming off the cow with your weights, even if you don't feel like you're a backgrounder, you may want to consider that insurance because there could be some money you're leaving on the table. There were some questions, some as a cow-calf director, some folks have talked to me about this concern, I guess, about breeding stock and having to know which cattle you're going to breed whenever you wean. So first of all, we'll go over the sheet. This is the front and the back page of the sheet. So the lot number, I just called them my April May calves because they all are. They're heifers. There's 9 of them. They were born in April. Usually my earlier calves are the ones I'm going to keep. We have scales, so I didn't know their weight. And then when we got there, and there was a total of 9, and then I signed it. And then on the back, I was a bit of a do-gooder here. I didn't need to list out all 9 CCIA tags. I could have just done the range. But to be honest, by the time I got them all sorted out, I thought I'll just write them all down. So I did. I'm not sure if the Agricorp people appreciated that or not. They probably would have rather I sent it as a range. But anyways, that's what I did. So fairly straightforward. to fill this document out. Down in this corner here, the key point is if you decide not to keep them for breeding, you don't really have to decide. You need to have some idea whenever you wean or in the fall, but you don't have to concretely decide. You could identify, maybe you've got 15, you're going to keep 10, you're not sure which of them, you want to see how they grow out through the winter. You could list all 15. And then, in March or whenever you're making your decisions of who you're going to breed, then just take off the CCI tags, take the 5 off that you decide to send over to background or finishing or sell or whatever. But all you can do is call Agricorp and have them remove the CCIA tag numbers. And I'll apologize to those. We do have a fairly straightforward system here. I mean, we're calving in April, May, we wean in November, and then we background a bit. So it's only the year. So I'll apologize to the feedlot guys that I don't have a lot to relate here to for you, but I do have my sun sheet here. We can talk about it for a minute, but and then for those of you that are keeping some heifers over, of course, we're doing that as well. Yeah. So yeah, so this is oh, right. And then the other thing is the way I do it is I didn't have too much luck up front with the online reporting, and mostly it was my ignorance about where to click and what to do and confusing background and cow calf. So I've been the way I do it is I fill out the paper sheets, I scan them with my phone, and then I email them in. But my son, who's doing the feedlot part of our business, he buys our calves and then finishes them in the final 6 months, and then Freezer Beef sells them. This is what the sheet looks like. So the top line there, they were booked in on December 6th. They're the heifers. They went rail because they went to the local abattoir. There were 7 of them. And then this is the hanging weight of 656. They weren't all that light. We had some other ones, but and then private sale, and the rail price. Were they raised from birth? No, not for him because he bought them from us. They were all 7 were purchased. And when did he buy them from us? The end of March. And what did they weigh when he bought them for 472? So that's the online, and and I understand, and that's something we've got to do better because getting the papers, we're allowed to do it, of course, but I know it makes it harder for the Agricorp people, or it's a lot more efficient for them if we did like put it right in. And so that's one of our goals, is to get comfortable with that again and start inputting the information online. This sheet, not this is what comes back once you're done. So this is the cow calf category. I'm not say I fully understand it. I mean, it shows the logic of our cattle and their weight, and if they were backgrounders or as calves, and how they came to the amount of money that they were going to give us. Down at the bottom here, the target price, 2095, and because we're 100%, we decided to do the 100% thing. Our support level is 100% of that number, and Ellen can step in here if I'm wrong, but if I had chosen to go with 80% kind of disaster insurance, then this number here would be 80% of this number. So our support level was at 2095, and the market price was 2150 almost. So I don't know if I fully understand this sheet. But now we can come back to it if we need to. So that's the sheet that comes back. There's other sections of it. There's a backgrounder section that shows the pounds and just the explanation of how they came to the payments that we love to receive. So this is actually my final slide. And some key takeaways. So the program year is January 1st to December 31st, and renewal time is in April. So one of the mistakes I made is that as I was doing the renewal, I was looking forward. So I was looking forward to how many calves am I going to have and how many am I going to background, knowing that I'm going to be going into, let's say, into 2027. And that's what I was putting on my sheet. That was one of the mistakes I made. So for my backgrounder and my pounds, if I'm in April of 2025, I've already sold my backgrounded cattle in 2025, like in March or in February. So even though you're in April, you have to look at what you're going to be doing, selling from January 1st to December 31st in that year. So you may have to look back, not always forward, if that makes sense. So for my cow calf, this year we got 45. So I should have 45 cow calf, but all my backgrounders are gone. So I'll be looking backwards in 2026 to see how many pounds I sold in 2026 as backgrounders, if that makes sense. Hopefully it does. Um, have decent records of your births, deaths, birth dates, sale dates, and weights. I know this seems like we all should know how many we have, but if you do procrastinate and put it off and you're filling it out on January 31st, and trying to, find all your memory isn't quite there. And the other the other thing is your weights need to be accurate. Don't just guess at your sale weights. Like go because I did that. I was in a hurry to submit it, and I thought, oh, that it doesn't matter, and that was stupid. So make sure you go back to your sales and get very specific, get the specific weights of and your sale dates of when you're selling your calves. A lot of time for cow calf guys, they all go on a couple dates, but it's not that complicated. But make sure you do have to have key or have decent records. So know your typical weaning weights. And the reason I say that is what I was talking about before, that if your calves are coming off your cows at 650 or 700 and you don't consider yourself a backgrounder because you sell them straight off, so you're just a cow calf, you're actually you've got some free pounds there that you could have that you could put in when you submit in April, put in for the backgrounder category, pay the premium. If you don't make, those weights and you're only at 550, you don't have any sales in the backgrounder area, you'll get that premium back. So it's like no harm, no foul if you do submit into the backgrounder category, and then you end up not having any cattle in that weight class of 550. I'm talking about steers, 550 up to whatever it is, 950. So don't get hung up on that term backgrounder. Look at the actual weights that you're selling, and then determine. Um, have a base plan of when you want to sell, but don't stress about it. Agricorp will work with you if you change your mind. So if you plan to keep them through to, next February or March, and then like we did last year, the market was hot and we were just kind of concerned about everything. So we sold those 11 steers in November, which we don't typically do. Just call Agricorp and they'll work with you if you do make some changes. If it goes the other way, where you plan on selling the cows, but then decide to background them and you didn't submit any backgrounding pounds or into that category in the spring, in the previous spring when you renewed, then you'll have a problem with that because you're not in the backgrounder, so you've got nothing to make an adjustment with. So my advice as a producer is kind of go big. Go like submit if you're a cow calf guy and your weights are over 550, then maybe you should submit for backgrounder. If you don't end up getting any pounds, you'll get the premium back. With the heifers or bulls breeding stock, it is a little bit annoying to be trying to decide what heifers you're going to keep because you don't know. And I know I touched on that earlier. But again, my advice is go big. If you're going to keep 10 and you're pretty sure it's within this group of 15, then put all 15 in, like as breeding stock, and then take the ones out that you don't end up using as breeding stock, and put them over into your background or feeding program, assuming that you're signed up for it. Agricorp, maybe they don't want you changing things, so Ellen may not totally agree with me telling you to go big, but There is flexibility there. You don't have to decide at weaning time exactly the heifers you're going to keep. You do have some flexibility later on. I mean, don't put all 50 in if you're only keeping 10 and ask them to switch over 40, but have some idea. And then the last advice is call Agricorp if you do have, and this is again as a producer, because I have called and I've got, and they're all good people, don't get me wrong. Some are just, let's say some understand my questions quicker. If you don't get the answers, just call back. There's some really awesome people there, and the majority of them, like I say, are fantastic. And sometimes it's just the way I'm asking the question. It's hard for them to answer, but or I'm not getting the answers I want. But if you have any questions or need direction, then just call back and see if someone else can help you. So yeah, my mistakes through the years, like one was not looking, always looking forward when I was doing my estimations, not looking, year to year. Sometimes I need to look back. I missed one year on some heifers that I should have done the payment without sale. So I'm, clear on that now. Um, and then, well, those are the two big. Well, then the other one was this past year because we decided to sell those steers in November, and my so all I had sold kind of a year and a half in one year, and I should have called Agricorp last fall and let them know that my numbers were going to be different in the cow calf section. So that all made sense to me. I'm not sure if it made sense to you. I hope it did, and I'll turn it back over to Jacqueline.
That's great, Jim. It did make sense to us too. So, or hopefully at least to everyone else it did. I think it is always super helpful to have some producer like real life examples of how the program can work and different ways that you maybe need to think through, like you said, actually thinking about what it is you're selling within that program year, I think is a big one that gets people kind of confused sometimes too. So, great to have that context there as well. So just a reminder, if you would like to ask a question, you can feel free to put it into the chat, or there is a raise a hand function, or if you need to just unmute if you can't find that and let us know that you have a question. Ellen and Jim would be happy to be able to take those. So we do have a couple hidden here already. So one was, how does it work on paper when you sell a calf that's 700 pounds if you've kept it from birth? So Jim, kind of similar to your situation of what you do in keeping your calves a little bit heavier. But if either of you wanted to maybe just explain that process there.
Yeah, maybe I'll just from a program perspective, again, it's like Jim said, it's having that coverage at the start of the year. So if you've raised them from birth, and you are looking to cover the risk from 0 pounds to 700 pounds, you would need to be enrolled in the cow calf and the backgrounder category. Your payment would come when you sell. So again, when you sell them at that 700 pounds, there would be a payment in the backgrounder category from that. If they're steers or heifers, those weights will vary a little bit, but from 500 up to that 700 or 550 to 700, or whether they're steers or heifers, there would be a payment in that backgrounder category, and then in the cow calf category up to the 500 pounds. So if you were only enrolled at the cow calf category, the payment would be capped at that 500 or 550.
Perfect. Thank you, Ellen. Um, a positive comment in here, Jim, on good advice regarding the payments without sale for those breeding heifers. And that was specifically a topic we've had a lot of cow-calf producers really asking about when we're out doing meetings, is really trying to understand that how the program can still work even when they're keeping some replacement animals as well. So we have another question here. How was a payment generated with the target price or support level lower than the market price?
I had the same question. I wish I'd let, I know that was on my sheet, and as I went across, that's why I just bailed and went because I'm like, oh my gosh, why do I have a payment on that? So I'm
I,
sorry,
I,
Ellen.
I might let Kellen answer this one, or someone from
Yeah.
Omaha. I know the answer, but I ask this question often when I see the payment rate. So Kellen's probably like, "This is Ellen's question all the time." So
It,
we'll let them answer that one for you.
so the payment is created as Jimmy outlined, you're paid twice a year in June, end of June, and top up here December 31st. So the weekly, they are calculated based on average pricing and cost per week that are summarized for that particular time period. So there's a weekly in the background, there's a weekly calculated cost based on industry numbers, whether it be looking at market prices. And then the yardage, the cost of production is based on, and then the support level varies on a week-to-week basis, and then summarized at the end of the year. So I think that answers your question there, Judy. And then, of course, there's also the steer versus heifer as well. So there's blending in there as well.
Perfect. Yeah, thank you. I think one of the misconceptions oftentimes with the program is that it's based on your own sale price of animals, not the industry average at the time of sale. And same with for cost of production as well. So the program doesn't penalize people for good production and keeping your cost of production low. It just goes off of industry averages. So yeah, which works out to be favorable for most people, I think, too. Another question here about, are you paid on average weight of steers or heifers when they're sent, or individual weights?
Yeah, so if you're reporting them to us, it would be the average weight for that group. So they would look at, again, that average weight would be for that weight gain that you'd be looking at in for what you've had enrolled and paid on.
Perfect. Thanks, Ellen. Can replacement heifers born in 2025 qualify for 2026 coverage? So like referencing breeding replacement heifers.
So again, they're eligible when they reach that cow-calf weight. So again, depending on when they reach that 500 or 550, depending on if it's a heifer or a bull that you're keeping, that would be the time frame when you'd have to report. So again, if born at the end of 2025, they're going to be 500 pounds in January, February, March of 2026, then yes, they would be eligible. If they were already that 500 or 550 pounds in 2025, that would have been eligible for the 2025 program.
Right. Okay. Thank you. And if any of these answers, if you're still feeling like you have questions, just put some follow-up questions in there as well. Another question kind of similar to, are there deadlines for calves being sold from the cow-calf section? So are September born calves that are weaned and sold the following spring eligible? So kind of similar, I think, to Jim's comments before, but go ahead, Ellen.
Yeah, so again, it's going to be when they reach that category weight, right? So sorry, remind me of the dates there, Jacqueline. Sorry.
So that one was September born calves that are weaned and sold are they eligible the following spring?
Yeah, so depending on, again, the weight range. So chances are born in September, by the time they reach 500 or 550 pounds, you're going to be into the new year. So then they would qualify that next program year.
So that would be similar to my situation with the backgrounding. Like when you're filling out your renewal in April, um, you would actually know really well how many calves you had last September and how many you're selling in 2026. So you could be really accurate on your renewal submission because they're going to hit that 500 or 550 in the year that you're doing the renewal. I'm looking at Ellen to see if she's going to head for well, she's nodding. Okay, yeah.
Yeah, yeah, and I think, Jim, we talked about it a lot, and I think that, and Jacqueline mentioned it's really important, right? You're thinking about when you're going to sell those animals in that program year, and that's what you're really doing at enrollment time, is thinking about January 1st to December 31st, what's going to hit what weight ranges and what categories do you need coverage in. And again, maybe you only want cow-calf. Maybe you only want up to 500 pounds. That's what's important to you in your operation. That's okay. Maybe you want coverage in those other categories. So those are the decisions you have to make in April.
Thank you. There's another question here on if you're enrolling in the cow-calf and feedlots sections, do you also need to be enrolled in the background? Or could you opt out of one category? So I think that was kind of
Yep,
mentioned. Go
you
ahead,
can
Ellen.
opt out of one category. So again, in that situation, you wouldn't have coverage for that middle weight gain. Again, heifers, steers, looking at those categories and the weights, you wouldn't be covered for that weight gain and that any costs or lower market prices during that period. It would only be in those two end sections. And again, once you're enrolled in a category, if you want to cancel out of that category, you'd be out current plus two.
Right. Okay. And thanks for that reminder, because I know that's a comment that's come up before. So maybe, Ellen, would you mind mentioning again your strategy, maybe that if some people don't happen to be backgrounding calves that year, if they still stay enrolled in that category, they would report that they did not sell any animals within
Yeah,
that
right.
period, but not miss out.
Yeah, so thinking of Jim's situation where he was talking about he's gonna get cow, calf, and backgrounder coverage at the start of the year, thinking he's gonna raise those cattle to 650. He wants that extra coverage in that backgrounder category. Maybe something happens management wise, prices are heading one way or the other, and he decides to sell sooner. So maybe all those calves are sold at 500 and 550 pounds. He would then let us know that he had zero production in that backgrounder category. That's fine. We would refund premium if it's already been paid, or reporting the zero production leaves him in that category for future years if he chooses to go back or has weight gain in a future year.
Yeah, we should. Well, in the previous webinar, I know Matt and Bruce talked about the fact that if you opt out, you're out for that. You're out for 3 years right? So yeah, you need to be careful. You're better to pay and stay in and then get the money back, from a producer's point of view, I believe, than you are to make a decision to opt out and then be out for 3 years.
Right. Thank you. Tom, do you have a question?
Yeah, I couldn't figure out the right way to put
Yes.
my hand up.
Sorry. Yeah, go ahead.
So just trying to understand the payment method. Payments are calculated based on average, like industry standard cost of production. And if sale barn prices aren't meeting or exceeding that, you get paid out the difference.
That's right. So it would
Sorry,
be
go
the
ahead.
difference between that support level and the market price, that average market price that OMAFRA calculates. It's a provincially funded program, so there's a 40% there as well. But yes, that's right. The payment rate, looking at that support level minus the market price, and then taking into the program funding as well. Kellen, jump
And
in if
then if
there's anything else there.
No, I think you covered it quite well there, Ellen. And then, of course, as we talked about previously, the blending as well function in there, whether you're selling a steer or a heifer. So,
But Tom, I think you
so
hit the nail on the head the way you said it. Like,
so is there a number, like what essentially on a 500-pound calf, what does the sales barn price have to hit that you don't get a payout?
And do you want to
that's
talk
a
about
hard
that,
that's a hard question.
how that support level is calculated and changes throughout the year?
Tom, the numbers go in a big machine and it pops out the other side. Like I don't know that in like there's a bunch of factors that come into it, but it's industry average cost of production, industry average prices. There is, and what we haven't talked about here is that there's an RMP committee. I'm not on it. So as a BFO guy, there's non-BFO directors that are on this reference committee, they call it, but directors are there as well, and they give input to OMAF, about the process. Kellen, is that a fair way? You're not going to be able to specifically answer Tom's question, I don't think, is my point.
no, I think Tom, there's a lot of moving factors depending on the category as well. But like industry average, from when it comes to a price, the purchase price of the animal, then you have your feed cost. You could have pasture cost, and well, that's been agreed upon by the reference committee, as you talked about, Jim. So these guys talk, and they we talk as a committee, and the policies derived in collaboration with this committee. So
And
yes, there's a
then
lot of variables in there.
And then if you want to be real comfortable, look at that first sheet of mine where I'm ahead 15 grand or something on 40 head. So whatever that machine's doing, it's doing something good.
Well, I guess that's kind of my question. Is it a no, like, can you never lose in this insurance game? Is that because essentially for you to pay your premium and not get it back, the market price has to exceed such and such a value that you're above your cost, the calculated cost of production.
Yeah, Tom,
Right.
it's John. I work for the ministry and I kind of help Kellen run the numbers and so on. So you asked about cow calf specifically, is that right?
Yeah.
Yeah, so like over the years, we basically go through and do the calculation to say, based on everybody's data that we have, what is like the average number to produce a cow calf animal? And over the years, I've kind of seen, 1,500, 1,800, 2,200, and now we're up, around $2,500, somewhere in that vicinity. And so if you take 100% coverage, obviously that support is $2,500. If you take 90%, then it's 2,250, so on and so forth. So we kind of hold that there as the cost of production. And then we follow the auction every single week. We work with the beef farmers of Ontario and, some of the categories that represent that, 500 or 550 animal, we follow the prices. And if the average price kind of drops below that, for example, $2,500 that we're talking about, that's when the program triggers a cow calf payment.
Yep. Thanks very much.
Yeah.
Thank you, John. We'll go to you now.
Dwight always told me we'll get into RMP. It works well, and it takes me a while sometimes, but finally I'm getting to it. So, a couple questions on our scenario. So we had April cows last year. We sold heifers here last week at over 1,000 pounds. How do we report, or as a new person coming into the program, what do we report? Do we report those cattle we just sold last week? What if they're over 1,000 pounds? Is it worthwhile enrolling them in the feedlot section if we're not taking them through to finished weight?
This would be like a new application for 2026, not been in the program before. Is that right?
Correct, Dylan. Yeah.
Okay, so yeah, so you technically would have weight gain up to 1,000 pounds. So those animals would be eligible in all three categories. So probably your best bet, premium rates and everything are going to be on our website here, probably the end around the 25th of March or the first of the week of March 30th. So we probably want to have a look at the coverage levels that are available for each of those categories, look at what the premium rate would be, and then you can decide whether it's worth the premium for those extra couple hundred pounds in the feedlot category or not. So again, you can enroll in any of those categories. You can enroll 1, 2, or 3 of those. Technically, those animals would be eligible for all 3.
Okay. Thank you.
Ryan, go ahead.
Yeah, I was just wondering why the no sale report, the heifers, why is that weight so low? Like at what, at a 500-pound heifer, like they haven't even reached maturity yet. So why is that weight not 750, 800, 900 when they're actually ready to breed? Because I do keep some and I fill out a no sale report, but I essentially lose, coverage level from that 550 on up through.
Right, before you make that decision on if you're keeping them for
Right.
breeding animals. Yeah, yeah,
To
go ahead,
Jim's point,
Ellen.
it seems like a lot of extra paperwork. Like that's the way the program wants it, but to fill out extras in that category and then retract them back out of the category when they're actually at maturity weight.
I think, and maybe my ministry folks and maybe some people on the reference committee can help here too. Those categories and those weights were decided between the groups and with the reference committee and BFO when the program started. So that's where that weight in that cow-calf category had gone to the 500 for heifers and the 550 for bulls or steers. Again, when the payment without sale was introduced, the program was originally a market-based program for cattle that were being sold through to the feedlot to the slaughter as the end point, and the payment without sale was really added to try to give some coverage to those producers that were in breeding and thinking that the majority of those costs were in that cost of production category. So in that cow calf category, and wanting to make sure that coverage was there for those producers that were strictly on the breeding side. I don't know, John or Kellen or anybody on the reference committee, any thoughts to where how that had come up?
Yeah, I think you're right, Ellen. So like the way that those categories are kind of done, the 5 or 550, the 850 or 9, for us to say when you've decided to make an animal, or retain it, it's challenging for us to say your management. But we have a little bit of trouble in a program to kind of live in the gray zone to say, well, I chose at 750 instead of 825 or 675. And so we kind of had to make it at the kind of the transfer from one category to the next. And in collaboration with the beef guys on the reference committee, putting it at the edge, the transfer from the cow calf to the backgrounder seemed to make more sense than when they were getting to be into the feedlot sector. But I do hear what you're saying about a few £100 there kind of being not eligible essentially for there. But I mean, to Ellen's point, we've introduced this a couple of years ago to try and add some flexibility and try and capture what folks are doing on farm. They kind of said, listen, it'd be nice to have some coverage, some flexibility to have some coverage for retained animals. So, we're able to introduce that at least.
All right, thanks.
Yeah.
So we have a couple more questions here in the chat as well. So if your sale barn sorts your calves into weight groups, how do you report that sale weight of those animals? And I know, Jim, you kind of spoke to the accuracy maybe needed of weights of calves when you're reporting too. So maybe how you'd manage that in practice.
So I don't sell to pre-sorts, so I'm not sure how the sheet comes back from Katie, I would imagine, but they do pre-sorts. So I assume that on there they have to be able to figure out your what to pay you. So I assume that they would give you those breakouts, Earl. But sorry, I don't sell into pre-sorts.
And I must admit, on my end, I don't see the sales reports come in either, so I'm not 100% sure on the reporting, but it is something, again, if you are filling out a sales report probably and have any questions, definitely give a call into our call center to help you to know exactly what to put on that form.
Yeah, because there certainly should be the weights on your report still, but yes, might depend on your sales barn of how they report that back there, Earl. Another question here about when it comes to custom fed animals or animals that are on a shares basis, who would file for the RMP? Would it be the owner or the feeder of the animals? And that might come back to how you report regarding your premise ID and your farm business registration number. But Ellen, maybe turn
And I
it to
think
you.
ownership would be the big thing there as well, and who's got the risk and the ownership risk and the price risk there. So again, I think those situations are probably going to be unique to the situation. So you will see on your renewal or on the application, it does ask you to tell us about your business scenarios and who you're farming with and joint ventures and things like that. So those ones again, I think are case by case basis. But really, again, you need to have the ownership of those animals and the price risk and the ownership for the number of days. So again, something that specifically you can get into with a customer care rep on your own situation.
Yeah, that's good. And there is on the forms too, you're putting in the CCIA tag numbers to make sure calves aren't getting reported in by two different owners or something like that as well. So, but yes, probably a case by case situation on that one. Another question here about payment for calves that die before being sold. And I know, Ellen, you had mentioned before about, percentage changes and year-end adjustments that are needed. How does that work? If it's, under 5%, hopefully of your death loss if that was the case. But yeah, how does that part work?
Yeah, so there is no adjustment from the program if it's under 5%. So it would be between the 5 and 25%. But yeah, no, the program is based on sale. So unfortunately, if something dies prior to sale, it wouldn't be eligible. Now, again, if you've got that weight gain or that head in your enrolled production and it does take you somewhere within that 5 and 25%. Those adjustments would be done from a premium perspective at the end of the year when we've done all the final payments and compare your actual production to what you had enrolled at the start of the year.
So you get the premium back, but you're not going to get paid the insurance claim or whatever. Like there's not going to be a payment, but you would get like if one dies, you'll get the premium back, but you won't get the payment.
And you
Is that the way to simplify it?
may or may not get the premium back again if it's under the 5%. Like
Yes.
Jacqueline had said too, right? Those year-end premium adjustments are for that 5 to 25% or over 25 as well, of course. But again, so it just depends where you fall in that scenario of what that loss rate would be.
But to be clear, there's no payment unless it's sold.
Correct. Correct.
Okay. If people do have more questions, you can still put those into the chat or feel free to raise your hand. We will be, I know, Ellen, you had referenced already about the premium rates, and those will be shared on your website as well when the new dates, you have a rates and dates kind of form that comes out, and you were saying that would be the last week of March is the hope for those.
Yeah, that's the hope. We hope to send the renewals out March 25th. And then that would also be the time we'd have the application up on the website, premium rates. And again, there'll be a calculating market price feature sheet. There's some really good information on there, as well as a handbook for producers that may be new. And I know the one thing just to mention as well, we were talking about changing productions and things like that and being in, if you are in a category as well and you just don't have sales for that quarter, you can also report that to us. Just you have to report 0 sales for the quarter. So each quarter that you're supposed to report sales, if you don't have any, it is important to let us know you've got 0 sales. And then that way we know you're still involved, everything like that. It's just that you don't have any sales to report for that period, and we wouldn't be looking to calculate a payment or anything for you.
Right, that's a good reminder. And just a question about renewals versus somebody who's, first time getting into the program, and how I think for the renewal process, you're able to just check off that you are renewing. But for the first time, what's kind of that process for them to begin?
Yeah, so I think for the renewal customers, like we said, good opportunity to go back and look at your coverage. It will roll over from the year before. So take a few minutes, look and make sure you've got the right coverage, you've got the right enrolled production. Maybe you're going to be having more cattle this year, less cattle. We want to make sure that that's right at the start of the year, so you're being invoiced correctly and your payments are correct. From a new application perspective, there is a form to fill out. Again, it'll be available on our website that last week of March as well. And we would go through a lot of the steps we talked about in the presentation. So you would have to figure out what your enrolled production would be, figure out what categories you want coverage in, figure out the coverage level you want. So again, when those premium rates are posted, you'll be able to make some of those decisions from your management side of things. And again, we'd ask you some questions about your operation, like we talked about joint venture, ownership, feeding arrangements, things like that. So yeah, the application would have a few different sections for you to complete. And again, call center happy to help you walk through anything you have with questions for that once you see the application.
Wonderful. Thanks, Ellen. I did put a few of the links into the chat as well that Ellen has mentioned. So the participant handbook, definitely a helpful one if this is a new program to you. Kind of walks through everything that Ellen has talked about tonight too, and having that all in one place, as well as the forms and the links to those on the website as well. Everything does get updated as the new rates and premium rates are available. So those will be available on the website as well. We will be sharing the recording too from tonight. So if you wanted to look back, or for those, we had quite a few more registered that didn't join on tonight. So we'll make sure that we send an email out to share this recording. And in there, I'll put those links as well to some of the resources for producers. But I'll maybe see if anyone does have any further questions. We really do appreciate the questions that you had, and hopefully it's feeling a little more clear maybe how the program could work for you. Specifically, we were looking at on the cow-calf side of things tonight and wanting to be able to address some questions that we've had over the last couple of years. But hopefully you can see the value in this program, and there's not too many different ways on the beef side of things you can manage risk or mitigate some of those potential risks that you face. So this is certainly a very valuable program that I think has worked really well for a lot of producers in the beef sector. So hopefully you can see some value in the program for that as well. We would like to thank Ellen and Jim both for sharing and presenting tonight. It's great to have the producer perspective and also being able to hear the great team at Agricorp and how they can help support producers as well. And thank you to John and Kellen for also stepping in to help answer some questions. We certainly appreciate that. And if we don't have any further questions, unless anyone had anything else that they wanted to add before we finish up here. No, the awkward silence says no, so that's that's great. We certainly do appreciate everybody's time. Thanks so much for joining us tonight. Hopefully everyone enjoys the rest of St. Patrick's Day, and again, I'll be following up with an email with some more resources. But thank you everyone for your time, and have a good night.
Thanks, everyone. Have a good night.